So it does look to me like gold has probably completed a daily cycle low. So I'm going to prepare people for what I think is probably going to happen here. I suspect this is going to turn into a left translated cycle uh, for the simple reason that I don't think the intermediate rally in the dollar is done yet. As I discussed in my last video, the dollar probably still has another 4, maybe even 5 weeks yet before it finds a final intermediate top. So gold should have at least one left translated daily cycle here, and right now we don't have that. We have the first this first daily cycle out of this intermediate bottom was right translated, and as usually happens, a right translated cycle does not move below the prior cycle low. So, we never expected this daily cycle low to drop below this one, but we should have the second daily cycle here should be a left translated cycle. So the rally should be weak. It should not go above this high, and then it should roll over in a left translated pattern, break below this daily cycle low, and give us uh, another bottom. At this point, I would say it's probably going to occur in November. Um, it may break below this low. It's way too early for me to tell at this point, but I do not think that it's going to break below the 2016 yearly cycle low. So I think the pattern of higher lows, here was the bear market low, here was the 2016 yearly cycle low. As of right now, I think this is probably the yearly cycle low, and you can see it is held well above the 2016 yearly cycle low. But if this daily cycle does roll over, and if it were to come down and break below this, I think it's still going to hold well above the 2016 yearly cycle low. So I think this pattern of higher lows is going to remain intact, and maybe we just gold is just in a some kind of a triangle um, consolidation basing pattern. So you could see something along this lines where we get a failed daily cycle low, and then we come down here in sometime in November and we put in our next intermediate cycle bottom, and maybe it drops marginally below the July low and tags this trend line. But I'm just guessing here. This is not a prediction. But if this were to make a lower to break this intermediate cycle low, this would not still would not suggest that gold is in a bear market as long as this intermediate cycle low holds above this one. So no matter where the yearly cycle low occurs, if it occurred here, or if we were to get a marginal break and maybe test this triangle trend line in November, as long as the yearly cycle low, no matter whether it occurs here or here, as long as it holds above this one, then we are still in a bull market and still just in a basing pattern. So I have, let me get rid of these. So I've noted before that in the declining, let's start with the advancing phase. In the advancing phase of an intermediate cycle, price gets overbought and tends to stay overbought. So you can see here we were in the advancing phase of the intermediate cycle, and you can see that the RSI got overbought, and it stayed overbought for a long period of time. In the declining phase of an intermediate cycle, the opposite is usually true. Once price gets overbought, then it tends to roll over fairly quickly and then make another leg down. So I advised subscribers yesterday that I thought gold had probably completed uh, its daily cycle low here, and for anyone that wanted to take a chance on the long side, this was probably your entry. And uh, and now you want to watch the RSI when it reaches overbought. That's probably where you want to sell. You don't want to expect this kind of strength during the declining phase of the intermediate cycle. So, if you're going to go long here, you want to be um, dancing close to the exit, and when price gets overbought, you probably want to get out. And if you're so inclined, that would be where you would want to put your shorts back on for the second leg down into a final intermediate bottom. And as I've explained um, during this last intermediate decline, an intermediate decline has to unfold as at least a three-wave pattern. You've got an A wave down, a B wave bounce, and a C wave down. Well, I think this intermediate decline, rather than this being a bounce out of a half cycle low, I think this time it's going to be a bounce out of a daily cycle low. And that will be the B wave part of the pattern, and then we'll get the move into a failed and left translated daily cycle low will be the C wave corrective move down into the final intermediate bottom. I've noted this before. It took a lot of attempts to get above this 1300 level. We've got two peaks here and then multiple attempts to get above this before the breakout. So I would watch that 1300 level as a possible resistance zone. If these moves are kind of weak as we come out of here, and that's what's looking like right now anyway, then I would expect RSI to be overbought once gold reaches that $1,300 level, and that may be the spot where this daily cycle gets turned back down, and then we start the final move down into a final intermediate cycle low, probably in November. So for those of you that are going to take a long trade here, I'll say that I did not take it in the metals portfolio. We've got some really good gains in the metals portfolio, and I'm just not willing to risk those gains on a potentially left translated cycle that you may have to time a perfect exit to make any money out of. This just may not be a very long rally. It may only last 5 to 8 days, and then if you don't time the exit almost perfectly and get out, then you can get caught in the next leg down. So it's just not something I'm willing to risk for the metals portfolio at this point, since we already have some excellent gains in that portfolio. I think I would rather just wait until I get a sign of a much more deeply oversold market, one that is showing signs of excessive bearishness. And right now, gold just does not qualify as that. The sentiment is pretty much dead neutral. That's not what I want to see at an intermediate cycle bottom. So there you have it. That's what I'm expecting. I think this is going to be a fairly weak bounce, maybe topping in this 1300 level. And I think we have one more leg down before the final intermediate cycle low. As long as that leg down does not break the December low, then yes, we still are in a bull market, but just still in that pacing phase.